Paradox of Plenty, Venezuelan Oil and Global Geopolitics. Venezuela's relationship with its oil reserves is a profound study in the resource curse. Despite possessing over 300 billion barrels of proven crude oil, the largest reserves on the planet, the nation has faced a decade of unprecedented economic contraction. This paradox is rooted in a history that shifted from being a global model of state-led efficiency to a cautionary tale of institutional decay and geopolitical isolation. The modern era of Venezuelan oil began in 1914 with the Zumaca first well, transitioning the country from an agrarian society to a petrostate. By the 1970s, Venezuela was the wealthiest nation in South America, a founding member of OPEC, and a crucial Western ally. The 1976 nationalization and creation of Petróleos de Venezuela, S.A., initially produced a professionalized, world-class entity that managed these riches with technical rigor. However, the rise of Hugo Chavez in 1998 fundamentally altered the industry's trajectory. Under the banner of the Bolivarian Revolution, Chavez redirected PDVSA's revenues away from infrastructure maintenance and exploration toward massive social spending. While this initially reduced poverty, it politicized the company, leading to the 2003 purge of thousands of technical experts and a slow erosion of production capacity. Geopolitically, Chavez used oil diplomacy to build a regional coalition against U.S. influence. Through PetroCaribe, Venezuela provided subsidized oil to Caribbean and Central American nations in exchange for political support. This strategy created a loyal bloc in the Organization of American States, OAS, but made the Venezuelan economy dangerously dependent on high global crude prices to sustain its domestic and foreign commitments. The 2014 collapse of global oil prices, followed by the death of Chavez and the rise of Nicolás Maduro, exposed the fragility of this model. Without the technical expertise or capital to maintain aging fields, production began a precipitous decline. This internal decay was exacerbated by the introduction of stringent U.S. sanctions in 2017 and 2019, which aimed to cut off the Maduro government's primary source of revenue. As of late 2025, the geopolitical stakes have reached a boiling point. The recent maximum pressure campaign by the United States, including a total blockade of sanctioned tankers, has turned the Caribbean into a theater of naval brinkmanship. These actions are designed not just to punish the Maduro regime, but to reassert U.S. influence in a hemisphere increasingly influenced by non-Western powers. The vacuum left by Western oil companies has been filled by China and Russia. China remains the largest importer of Venezuelan crude, often through oil-for-debt arrangements that bypass the U.S. financial system. For Beijing, Venezuela is a long-term strategic energy partner and a foothold in Latin America. For Moscow, it is a geopolitical pawn used to challenge U.S. hegemony in its own backyard. Furthermore, the nature of Venezuelan oil adds a layer of technical complexity to global markets. Most of its reserves in the Orinoco Belt consist of extra-heavy crude, which require specialized refineries and diluents to process. This makes Venezuela uniquely interdependent with U.S. Gulf Coast refineries, which were specifically designed to handle this grade of oil, creating a strange economic tether between two bitter political rivals. The humanitarian impact of this oil-centered conflict is staggering. The collapse of oil revenues, which once accounted for 95% of exports, has fueled one of the world's largest migration crises. Over 7 million Venezuelans have fled the country as basic services like electricity and water, which were historically subsidized by petrodollars, have failed alongside the oil industry. Looking ahead, the recovery of Venezuela's oil sector is not just a domestic challenge, but a global necessity for energy security. Analysts estimate that rebuilding production to its 1990s peak would require hundreds of billions of dollars in foreign investment. This cannot occur without a stable legal framework and a resolution to the current international sanctions regime. In 2025, the global oil market remains sensitive to Venezuelan risk. Even a minor disruption caused by naval blockades or domestic instability can spike prices for diesel and heavy fuels worldwide. This underscores the reality that as long as Venezuela sits on the world's largest reserves, its internal politics will remain a matter of international concern. The role of the shadow fleet. unflagged tankers used to smuggle crude to Asia, further complicates international law. The U.S. seizure of these vessels in late 2025 has drawn sharp rebukes from China and Russia, who view such actions as piracy. This tension highlights how oil has moved from a fungible commodity to a primary weapon in modern economic warfare. Domestically, the Maduro administration has attempted to stay afloat by offering stakes in mineral and oil assets to foreign allies. This fire sale approach may preserve the regime's power in the short term, but it risks ceding national sovereignty and mortgaging the country's future wealth to pay for present-day survival. The environmental cost of the industry's decline is also surfacing as a major regional issue. Years of underinvestment have led to frequent oil spills in Lake Maracaibo and the Caribbean coast. Without the oversight of a functioning PDVSA or international environmental standards, the Orinoco Belt faces long-term ecological degradation that could take decades to remediate. Ultimately, Venezuela's story is one of missed potential and strategic overreach. The nation's history demonstrates that natural resources alone do not guarantee prosperity. They require transparent institutions and a stable geopolitical environment to be a blessing rather than a curse. The current deadlock between the U.S. and Venezuela over oil exports serves as a microcosm of a broader shift toward a multipolar world. The outcome of this struggle will likely determine whether Venezuela reintegrates into the Western energy fold or becomes a permanent outpost for rival powers in the Americas. In the final analysis, Venezuelan oil is the black gold that both sustains and destroys the nation. It is the fuel for its social programs, the reason for its international isolation, and the primary leverage in its struggle for sovereignty. The geopolitical battle for control over these reserves is far from over. As the world transitions toward renewable energy, the window for Venezuela to leverage its oil wealth is slowly closing. The urgency of the 2025 crisis reflects a last-stand mentality for a petrostate trying to secure its place in a changing global order. True stability will only return when the oil industry is decoupled from ideological warfare. Until then, the vast reserves beneath the Orinoco will remain trapped wealth, a symbol of what Venezuela was, what it has lost, and what it might one day become again. The future of Venezuela and the global energy market are inextricably linked. Whether through a negotiated transition or continued escalation, the resolution of the Venezuelan oil crisis will redefine the geopolitics of the Western Hemisphere for the next generation. Would you